o'clock on the 22nd of March. Let's get started. Let me get this little pop-up out of the way. Happy to be with you on Friday, the 22nd. My name is Chris Pulver here for the Pulver Report. Let's talk some stocks, options, futures, forex, cryptos, and get after it. Everything we're talking about is for educational purpose only. You know, there's risk in trading. You know the deal. Just doing some spot checks on everything this morning. SPY down about cents pre-market. We do have an interesting gap that might be looking to get filled today. I took a 525 by 520 yesterday. Ended up closing that out for about 50 bucks. I'm looking to get back in if it's offered up. Let me see if I can get into my options platform here. Yes. I'll float this out, see some of the levels today pre-market, and we will discuss if we are out there in old YouTube land and everywhere else. Say hello, say good morning. Keem, good morning. Henrik, good morning. FK, good morning. Jacob, good morning. Happy Friday. There we go. All right, let's float this out there. So this is the SPY. Let's go pre-market. 523, 525. Be interested to see if we come down and fill this gap at 520 and change and then bounce back up. Had an interesting just thought. I'm sitting here taking some stabs at the market. I posted this on Twitter yesterday. One thing that we don't see a lot of is a full break above or below a Bollinger Band, and this is just a 20 period simple moving average Bollinger Band or Bollinger Bands on a daily chart, and the SPY and the SPX all printing this little tiny island candle that I wouldn't be surprised as far as a correction goes if we pull back into this gap or we pull back into the middle portion of this Bollinger Band, which, a 8 to 10 point correction wouldn't be the end of the world. It's not like it's doing major disruption, but think about this. For everyone, and I'm in this camp too. I mean, I've been talking about like, oh man, we're gonna have a correction. We should have a correction. We should have a correction. We should have a correction. Technically, it's long overdue. Problem is, we're not getting one. And I feel like I'm somewhat wasting capital on taking some, put plays or playing some long puts and trying to get some corrections, and it's just not happening. So, as good as this week was, I am taking. Well, I still have until the 28th until the 5th, and so I mean, I got a little bit of time here before I say like, oh, I'm taking losses. But I do have positions that are upside down right now, with just a little stab at the downside. So, yeah, I mean, those positions are not doing well, but I'm still curious. If and when we get a break of a low, if the floor falls out, for example, how much further are we going to go to the downside? That's my question. And I don't know, but I mean, part of me is trying to take stabs to see if we get a bit of a short-term top to form. And one way I can take that trade is by taking some of these kind of directionally neutral positions. We did have a great week in volatility. That was one thing we expected to get this week. If you go to the low to high on this week's candle, the low is 511 and the high is 524. Average move for the SPY is about $10 and change, and delivering $13 a movement is good. The SPX averages around 104, and this week the SPX delivered, I think, 130. So low at 51.31, high at 52.61, 130 points, enough to make some good profit. I showed this strategy last week on Friday. I took this trade on Friday. Let me move some of the stuff out of the way. So earnings this week. So this type of strategy that I went into the week with, it developed nicely. By the time we got into this area, I was taking some profit. I was up about 200 bucks on the trade, which wasn't awesome. I mean, I'm not gonna lie. Like I paid, $13 and change for the debit and made about 200 bucks. Now, had I sat through and waited through FOMC, which was one-sided. I mean, FOMC was up on the announcement, FOMC was up on the press conference, and it continued to plug away at new highs. We had the SPX and the SPY and the DIA make new highs this week. We had the Qs test highs yesterday, didn't close above them. But then the trade was actually out here yesterday. So had I waited all the way through Wednesday into yesterday's trading, max profit was achieved on the call side, which would have been about, $9 on the position, which is really good. But I was playing it rather safe than sorry because we were on this side of the trade where, I had some profit. I could have locked it in. I wanted to lock it in. We had the Fed. I was hosting a trading battle. I had a ton of stuff going on Wednesday. And the reality was, I'm like, look, I'm going to play it safe. I'm going to take the profit, take my, 15% take profit level. And I like, a lot of times if we're going for high probability, 10%, 25% levels are good on some of these like index plays. Um, but of course, yes, it would have been nice in hindsight to hang on to a little bit longer, but hindsight's not a trader. So just telling you how it played out. $9 out of a $13.50 debit, making 66% of the trade is certainly a lot better than making 15% of the trade. But I also had trades on the SPY, the DIA, and the Qs made profit. I did look at some earnings plays. We'll talk about this more at 11 o'clock with equities on demand. But I did look at some earnings plays on Lululemon, FedEx, and Nike. So Nike pre-market's down to 94, and I believe I did okay. So I did on the weekly chart there. So it's going to be close. I mean, I didn't take the trade. I had a lot of profit this week. I was happy with the week as a whole. I just wanted to price these out and discuss them. I posted them yesterday. If anybody's interested, earnings plays can be great and easy money, and earnings plays can be super frustrating and a waste of money. So flip a coin, take your pick your battles. I decided not to, but I wanted to price them out and see how they did. So Nike is down about $6, $6 and change. And what's interesting is, it's a debit of 609. So it's almost exactly as I took the trade. Now, if Nike ends up opening here and pushing any lower, then this just gets into profit immediately. But we also are coming back into, maybe some September, looks like September lows, October lows from, let me get this out of the way here. September 2023 lows where we had this big rip on Nike. And let's take a look at the weekly chart. I mean, I don't mind $100 on Nike. I don't mind $85 on Nike. I don't know how much lower Nike would necessarily go. Perhaps it's doing something along these lines. If we have, maybe a wedge forming on Nike, something like that, and price kind of slows down. But I would say if I get the opportunity for a, buy near the lows of 80, I think there's opportunity there, at least in the short term. I don't know if I'm going to own shares of Nike, probably not, but certainly maybe take a couple stabs at some earning or some credit spreads. So let me set a chart alarm down here around $85. We come to $85. I'll take a look at it. 85 is is really a nice spot for me. And 90 wouldn't be bad, but this expiration would have been out to next Thursday where we have our quarterly expirations. So anyway, I priced it in. It's probably going to be trading up for maybe 650 to $7 today, just because there's some time premium left in it. And if we gap and then push a little bit lower, earnings from what I read were downsizing, like slower sales in China. I think that was kind of the news. But we have earnings beat and stock price is down. Why is that the case? That's what earnings do. Sometimes they make 0 cents. Okay. So that's Nike. Rod, good morning. Chris, good morning. Gary, good morning, sir. Henny, good morning. Ruth Ann, good morning. LG, David. Bill, what's up, man? Jan, good morning. Okay, so I said Nike, FedEx, and Lululemon. FedEx, holy shnikes. Well, that one paid out in a big way. Good Lord. I didn't take the trade, but I wanted to price it out. I posted it in my Telegram yesterday. If I had anybody that was interested in taking it, this would have been an easy trade. Holy, this is ridiculous. This was a $15 move, and right now it's up around $28. So this one's going to blow through the levels where again, it was a pretty expensive trade, but a 265 on the call side. Why did I post that number twice? I don't know. Hang on a second. What did I do? Oh, this needs to be a 285. So it's a 265 by 285. Okay. So it's a little bit closer than I thought, but it actually is pretty perfect. So it's fine. 264.85 is price. I did a 265 by 285. Again, I didn't take the trade. I priced it out. I was interested to see, what earnings could I have looked at this week. Notables that we talked about on Monday were right here. Chewy, Micron, Darden Restaurants had a miss. FedEx is up by 25 bucks. Lululemon, I'll take a look at in a moment. Nike is down, but this would have been a trade for $12.78. That's the cost of the trade. It's a debit the way that I played. I priced out the expected moves around $18, $19. So I sold $20 out, and we're trading right around 18. Actually, no, that's right. Is that 18 bucks? No, that's $28. So it's well beyond this, which means this trade opens up today and should be trading like instantly at $19 and change, and you can max out that profit. You're capped at 20 bucks by next Thursday. So to open this trade up and have it trade for 1950, 1960, 1975 is great. So that's an easy win. That's the fun part about earnings is yes, I would have paid 12.78 in the trade, but I almost instantly walk away with $7 of profit because that's where the price is going to open this morning. So not too bad. And then lastly, Lululemon. Another one that, good Lord, these all just had huge movements. It was a 452 by 437 on the put side. It was a 785 debit. I actually went out of the money in this one because it's an expensive stock, and I believe they had 250 spreads. So a 452 by 437, I capped it at 15 bucks, and obviously I wish that I didn't. But the expected move was only like $45, and let me see what the difference was. I think we got like a 50, almost a $60 move. So it was well beyond expected moves. Crazy. 478 to a pre-market of 416. You're looking at a $62 move, and the expected move is like 45 or 46. So again, another one that's pretty fun. Get in for 785. You're maxing out around 15. So this one offered more reward than risk, slightly. So you max out around 15 bucks of credit, pay your 785. So you walk out with some profit there, right? So $15 max minus 7.85, 715. So pretty instant, grab $7 of profit. Earnings cooperated with some big moves. So that's where earnings is fun, when you have big moves. When you don't, it's frustrating because instantly your volatility dries up. Your premiums are typically more expensive, and it is what it is. So for those three, from what I can tell, Nike is close to being in profit. It's a break even or better. And then Lululemon and FDX just did exactly what we needed, which is just blow out, have a big move beyond the expected move, which is how I calculate all my earnings plays. And those have been pretty nice. So good stuff. All right, opening bells in about 15 minutes. Let's take a look at everything else. The dollar index continues to be an interesting instrument to watch. It is hella confusing, but it seems like the dollar's getting stronger and the market keeps making higher highs. Go figure. That's an interesting correlation that hardly ever happens unless something's just kind of odd in the markets. But we're getting some dollar strength, and I still trust it very little. For whatever reason, I mean, I've been bullish on the dollar index. Obviously, I timed it poorly. I took a small, like 50 pip net loss on the basket. But when I was getting long, I was long in here, and I dealt with the drawdown, got most of my trades back into a small loss. I didn't stay with the dollar pairs through FOMC, and now I'm assessing to see, like, is this dollar getting stronger? Will we sustain the strength? Maybe the Fed was pretty dovish on Wednesday, but doesn't really matter. I mean, the good thing is there are way better trades out there right now in the FX world than just the dollar and just the yen. I mean, this week, let me check. I think at Hypertrend, we cleaned up some profits pretty nicely on the Swiss pairs. I'm up around 240 pips this week on Hypertrend, which I know probably took some losses and some switches on the dollar crosses. I bet the dollar switched around a couple times on me. So I might have taken some losses, but net, I know my Swiss pairs crushed it. So let me see here on the Swissy if I can come in and find historically. So I had Aussie, Swiss, Euro, Swiss, Euro, Swiss, Euro, Swiss, Aussie, New Zealand. Ooh, Aussie, New Zealand kicked some butt. That was 178, 175, 158. That cleaned up. Pound dollar took some loss. So my dollar pairs got beat up a little bit, but my Swiss pairs crushed it. My Aussie, New Zealand did well. And yeah, just let the thing do what it does. So 239 in the week there. If I go into my perfect storm did 333 this week. Okay, nice. So couple of automation deployments picking up some pips, and Hypertrend, we'll talk more about that today at 1 p.m. for class. And off we go. So dollar index watching. Currency wise, let's check and see what the currency strength chart's showing us for today. So today we have yen on top and the dollar, Swiss as well. Aussie's weak, New Zealand is weak. Volatility is pretty high. I mean, most of the time we're coming into these days, currency strength wise, getting like 30 on the vertical axis. Markets are certainly opening up a little bit through this Asia session last night. I mean, it's all started to expand around 9:40 p.m. So there's a lot of movement around the Asia session, continuing on through the active zone, which of course that's fine. Swiss yen is the one pair that I'm in that I'm short on, and you better not have stopped this out, you turd. Okay, good. I put a stop loss. I had a stop loss at 171. Thank you for cooperating, Swiss yen. I literally thought that there's no way this trade is gonna cooperate. Where do you post the trades for the perfect storm? Magpie. I don't post trades for the perfect storm. It's an automation that runs full auto. All I do is let it run in the same 8 currency pairs I've had it running on for 4 years. So I don't post any trades. I just let the robot take its trades. It trades 4-hour ranges on low volatility, low trending currency pairs, and just beats it up for 30 to 50 pips. So I don't post trades because it's a robot and it takes trades all the time. So if you're interested in more about that, in my Discord channel, I've got a thread on education. If you wanted a video on Perfect Storm, I'm happy to show it. There's a bunch of stuff out there that I mean, I've been tracking that robot now for going on 4+ years. I think this is either the 4th year of trading or the 5th year of trading, and it's very easy. It's a low maintenance, you know, consistent robot for me that I've had to step in one time in 4+ years to like manage a group trade when it like maxed out at 10 entries. And I think that was on the Aussie New Zealand, which is rare, but anyway. Did you see the Swiss breakout this week? Of course I did. Nice name, by the way. Yeah, we saw the Swiss break this week in our Swiss pairs. So the Swiss cut rates, which was pretty nice to see. So we had a big pop to the upside. Hypertrend cleaned up some profit on the Swiss crosses. I'm still long against the Swiss on everything. So Aussie Swiss, I'm long. We're getting a pullback, which is totally fine. I will look to, add where I can, where I think it's appropriate. CAD Swiss, big pop to the upside. I'll look for a pullback here towards like 65.85, and then see if we can make some additional fresh highs. The nice thing is we're getting this little head and shoulders trade that's paying out pretty well, and hopefully we're going to continue to trend up towards 68.30. It'd be nice to see a pullback. Euro Swiss heads higher. You can see some overbought conditions, which holy crap, I didn't think that was possible on the Swiss. We actually go up enough to have overbought conditions. Unbelievable. But anyway, I'm still long, so it'd be nice. I mean, let's get a pullback. So we have this low, we have this high. This to me looks like a nice reversal pattern. So if we get a pullback, I'll level back in. I think that offers up a chance to buy it again between like 96 and 95 on the Euro Swiss and continue to play the 3 to 5 wave game that I'm waiting for to get these big profits. But yeah, it was nice to see the Swiss actually cooperate, and it was nice to see a central bank flinch for once, as far as instead of holding rates like all the central banks are doing right now because they're like, we'll pause, we'll pause, we'll pause. Inflation, inflation, inflation. We'll follow the Fed. The Swiss is like, yeah, we're going to cut. So they cut by 25 basis points. It would be nice to see if there's more to come out of Switzerland, and maybe there is. And then if Switzerland is in right now with their rate cuts, does that make the ECB do it further or earlier before the Fed? The Fed rate cut's going to be sometime in markets anticipating a June or July rate cut right now. So as I see it on the Fed watch tool, the pause is still expected for May. June is about a 68% chance they will cut for the first time. So that would be cut one, and then possibly a September, November, cuts two and three. What the market took away from Fed on Wednesday this week is that the Fed's pretty firm on three cuts for the year so far. Now, inflation is showing higher numbers. We're going to go through, I mean, there is no Fed meeting in April, so we're going to have data from March into April, and we will see what that shows. Is it going to be slightly higher? According to what I see in the Fed reports, it's going to tick slightly higher once again. Mostly led by shelter, mostly led by transportation, which I think is probably airfare. I think like food prices are down. If you go out to eat, that's more expensive. You go to the grocery store, that's fair. For the most part, inflation's been brought down, but there's definitely some stickiness, and the Fed just they're not really. I don't know. They're speaking on both sides of their mouth. They're letting the markets believe they're going to cut rates three times this year. That obviously is subject to change. This is a wait and see. But as we get closer and closer to every meeting with the CME Watch tool, it's 99.99% accurate. I mean, there's only been one surprise, I think, in this tool since like 2009. Everything else has been when it comes up to the FOMC, it's either baked in or it's what the market expects. And the Fed does what the market expects. And that's because they drip that information every stinking month to be transparent. So, anyway, three rate cuts expected for the year. All right, but Swiss pairs, I like getting pullbacks, which is totally fine. Euro or pound Swiss has been one of our favorites as well, trying to take some profit up here at 1500, 1550. And I'm longer term looking to go bullish on this one all the way up to 1.2. So we have this low, this high. If I measure this low to projecting that high, that should put me right up around 1.20. So it would be nice to see if this is a pattern where this is a left tip, center tip, and then we get a pullback. We can add some more on the pound Swiss and go up again for a swing. It might take longer than that, but if we're in the wake of these pre-summer pushes and get some trends over the next couple of months from April and May, I would not be upset by that. New Zealand Swiss still sideways. We had a nice little squeeze on the New Zealand Swiss right here. We were long out of that little pop, and I mean we're trying to nudge higher. I'm looking to see if we just get a nice little breakout. If we get another pullback here, I'll probably scoop up another level. Probably these two spots. Scoop up a bottom, and then longer term, trying to get New Zealand Swiss all the way back up towards 6,000. So this is another one that if you look at the actual, price action, trend line's been broken. Trend line's been broken. It's just like, come on, bulls, round this bottom out, start making some higher highs and higher lows, and get a 3 to 5 wave move up towards 6,000. Plus positive carry. That's what I want to see on these Swiss pairs, and that's why I'm in them. Dollar yen. Dollar yen made some fresh highs. The BOJ leaves negative interest rate territory for the first time in over a decade, and the yen gets super weak in the process. So 152 is going to be an interesting spot. I do think there's a ton of stop losses sitting right there, so I wouldn't be surprised if the dollar yen and the yen in general gets a little bit weaker. Why is that? Because I think Japan loves the Nikkei going higher. Nikkei is at 40,888. It hasn't broken the floor. It hasn't taken out support. It's overbought, just like our indexes are. I mean, the SPY is overbought, the DIA is overbought, the IWM is struggling at that 205, 206 level. But we have shown tons of overbought conditions with divergence. And if there's some follow through there or some corrections there, I thought it'd be, middle to late February. Nope. I thought it'd be somewhere in March going into CPI data, that was higher. Nope. Thought it'd be the Fed maybe. Nope. So markets don't seem to care too much. They'll care eventually. Pre-market down a little bit. Like, is today the day? Yeah, maybe. Maybe it's a gap filler. Maybe next week is a down week. I don't know. So what I'll do is I'll probably look at something positioning myself on the SPX. If we're going to trade somewhere around 52.41, uh, I'm going to debate on this. I'll talk about this more in equities on demand. But if I build out, I'm going to edit these. So this trade is done. If I went to next week and did the 27th and 28th, let me see what the first looks like. That's a lot of extra time on the longs. So we'd have sells expiring the 28th, longs expiring the 1st. I don't really want to pay for all that extra time. So I'm gonna go into like the 27th, 28th and see what that looks like really quickly. So I'll go 27 and 28th right here, 27, 27, 28, 28. This is on the SPX. Sell, sell, buy, buy, sell, sell, buy, buy. Yes. And we're currently trading at 52.41. So if I did, let's say 52.90 or 95, let's see what that looks like on the call side. So I'll do a 52.95 and I'll go up to 53.45 there. And then a 52, let's go 53.10 or 53.05. Wait a tick here. Okay, I was like, where are my strikes at? I'll go 53.05 and a 53.15. There, that's my call side. Then my put side, 52.41, I'll drop that down to 51.90. 51.90 down to 51.40 and do a 80 and 70. An 80 and 70. I'll see if I can get this pretty symmetrical. So that's not a bad play. If I have price going up to 52.86, which is about 40 to 50 points up, another 40 to 50 points down, I would like to see if I want to shallow this out a little bit. So to me, I'd like to keep this a little bit shallower. So if it goes past my first peak, it's not necessarily dipping as heavy. So I can make a slight adjustment with those. If I buy in a little bit earlier, so if I did 52.95 and I do a 50, let's say a 5300, that might help me a little bit. And then a 51.90 and I'll do a 51.85. See if that helps a little bit. Yeah, that's better. I like that trade. I'm going to see what this price is in at today. So right now, I mean, I don't have a live feed, but in 1 minute I will. So let's see what the bid mid ask is. $8 isn't bad to take the trade. I'm not paying for as much time. And obviously I'm curious, like today, if I place this for next week, it's going into the quarterly expiration. Could I get another, 50 points going into like early trading next week to wrap up the quarter? Probably. So in a minute, let's see what this ends up looking like. There we go. Now the bid mid ask is all over the place. So I think I'm going to take the trade. Trading for like $11 and then see how this prices in over the weekend. So I'd still like to, man, that seems a little steep on the wing side. Bullocks. I know it's cheaper, but I think I'd like to see these spikes a little bit higher. So I might end up going out to like 55 or 60 points instead. So anyway, I don't need to bore you with that. I'll price it in a little bit more on my end. Let me grab something here. All right, just getting logged into my broker platform. 52.40. Looking at the SPY this morning as well. So 522 on the SPY. Levels are pretty even, but the bulls seem to have the gamma levels once again. 415, 451, 334. Real time. If we get back up to this 524 level, I wouldn't mind taking a little stab. Like this gap could get filled today, but I'm going to see if it just sticks around. If we rally up here a little bit, I might end up doing like a bear call spread nice and high today on the SPX and try to grab like 50 to $60 if I can. Yeah, I'll see. This yesterday was extremely quiet for a Thursday, but I guess it makes sense after FOMC that things just kind of stalled. The nice thing was is yesterday gapped up on the Qs to actually get me paid on all of my positions this week. So that was good. All right, get out of here. Take a look at everything. I think I just paid some dividends. Like that's a what is moving? Let me see. Out of the money, out of the money, out of the money. Boeing's all the way up to 191. Stupid 185 by 180s. Alibaba is fine. BITO is pulling back a little bit. Dutch Bros is fine. Chewy's trading at 16. I've got some cash secured puts that'll be fine, plus some shares. I think my shares are down a little bit. Yep. So shares of Chewy, they're covered out to $20 this week. I've got to calculate a break even. I'm going to see where Chewy can kind of find some footing, hopefully. 147 on Clorox. It's fine. Coinbase still way out of the money. Bull put spreads. Costco, bull put spreads, and this is Iron Condor. Elf's in good shape. Anyway, all right. I think it's my shares of Chewy that are probably costing me the most right now. That's where I see the negative P&L. Everything else that's an absorbed position. Let's see, 38. And those are cash secured puts, so that'll just take some time. WBA, all right, it's fine. Okie dokie. So 52.39. Still on track for sharp weekly gains. Yeah, we'll see. Chewy, take a look. 1586. I do have some cash secured puts that will likely be closing for profit today. They were 322 expirations, 1350, 13, and 1250. That'll be a little bit of income. I did buy some shares of Chewy. They're covered at 20. I'm going to lower the cost basis by probably doing another, week or two out. That at this point, I'm just going to try to get it. If I can grab a couple of bucks on it, I'd be fine. I need, $2 or more gives me $1,000. So I think I'd be lowering the cost basis and work this thing down to, cheaper than the price is actually trading for. That's the idea. Alrighty. Any requests, any charts, any other, want to see some currencies, want to trade some Bitcoin, stocks, like I said, has some decent earnings. Surprises on FedEx and Nike, or I should say, Lululemon and FedEx were really good surprises because they blew through the expected moves, and then Nike's kind of right on point. And if I actually show those trades, so here's Lulu, it would have been out to the 28th. Lulu is right here. So big push to the downside. That 452 by 437 is pretty much maxed out around $15, which is always good. FedEx to the upside. That was quick. So we opened. So there's the gap. So we open. We're pushing a little bit lower. We had a high at 291. This would have been, I would close out like instantly if I was in FedEx right now. Try to get my full, 19 to $20 a profit, max this thing out, be done with it. Nike is at 93, so this is pushing a little bit lower. If you want to max this thing out for, 10 or $11 a profit, we need price to go down to 91. Switch to newer styles to squeeze revenue. Cool. Well, I got a chart alarm set here at 85. If Nike falls enough, I think that's a pretty attractive level. Look at fair value, and Nike's in a pretty decent correction zone. I mean, we've got a 54% pullback since the highs in 2021. So it is, I guess you can say it's consumer discretionary, which maybe is why it's struggling a little bit. Let's do a quick year-to-date sector snapshot. Gold, silver, yep, good point. I'll take a look at those. Let's go year-to-date. So S&P year-to-date up 9.5%. Communication services 12.3, financials 11.46. JP Morgan continues to crush. I ended up taking a small loss on I had a bear call spread on JP Morgan that it was just being threatened, and I thought I'm not going to fight this thing, so I just closed it out for a small loss. Technology's up 9.2. Industrials coming in sneaky with 10.19 in the year. So General Electric up 38% this year. That's crazy. Caterpillar up 23% this year. Uber up 27%. How is Uber in industrial holdings? I have no idea. But General Electric just freaking killing it this year. Look at that. What is this, NVIDIA? Anyway, pretty crazy stuff. So, yeah, there are some stocks doing very well, and there's a lot that aren't. There's a lot that are treading water, but that's why there's market cap weighted, because the ones that do really well drag the whole thing higher, and we're seeing that a lot this year. Okay, gold and silver. Gold at 2174. It got super exciting with a fresh high post FOMC at 2223. The measure move for me is still 2271. I think gold's going to be volatile, but I still like the structure where we have this low, this high, a little bit of indecision, but this still remains kind of a bull flag type look. I'd still like to see if we just settle in around 2150, maybe 2150 to 2115. This would be kind of my, buy the dip window on gold. This is my halfway point. My full target's all the way up towards 2470. Silver, 2482. I want to see if this can break above 26. 2290. I was looking at Frank's trade from A1 Trading. I don't know if it's going to get there. He needs it between 2290 and 2330. I think it's SLV though. Might be close. 2290 and 23. So he's really tight. Yeah, so he needs this thing to jump up by 20 cents or so. Any advice on the JPY? Just wait. That's probably my best advice on the Japanese yen. I said it this week in the flex room. Just freaking wait. If like, what do you want? What do you want out of the yen? If you want thousands and thousands of pips to the downside, you got to wait. If that's the trade you're waiting for, it's not worth fighting right now. I don't think. Here are my thoughts. We are in a carry trade environment. Okay. It is not ready to unravel or unwind yet. So JPY will likely remain weak and continue to be bought on dips. The big sell will be obvious because we're going to break all these huge trend lines and huge trends and these huge lows that have been formed in the market. We will have to break all of those. And then it's going to be obvious, like, oh yeah, I think the Japanese yen is getting stronger, right? So if you want to call the top, good luck. If you want to sell and jump on board for 1,000+ pips or 2,000 pips to the downside, just wait. I mean, if this is as easy as it gets from this point to this point, once we see confirmation, yeah, let's sell it for 2,000 pips. But why would we try to sell it now and now and now and now and now and now and now, guessing? Just wait. So I think the better trade is stay weak on the yen, right? Meaning, like, buy against the yen right now, enjoy some positive swap, get some positive financing, and look to follow a trend to the upside. And it's going to be messy and ugly, and I'm trading the yen cross is super small. But if I really want this big unraveling, it's probably not happening now. It's I don't know. I mean, the timing could be something where it's later this year, post election for the U.S. There could be I mean, think about this: the Japanese yen getting stronger is going to be seen as a risk-off trade, and the Nikkei is going to have to go down. The U.S. market's going to have to go down. It's going to be a big risk-off environment, and that, as a whole, is probably not happening right now. So I think the markets are doing a really good job of ignoring pretty much everything and just trying to grind higher. So that's it. I don't think there's anything to do on the yen as far as big yen strength. I think we just trade what we see, and right now that short term trend is continuing to be showing bullish against the yen. The Nikkei wants to go higher. It's probably going to go higher. The U.S. markets want to melt up. They're probably going to melt up. I mean, the S&P up, almost 10%. 9.53. Look, historically speaking, during an election year, the average move in the S&P is like 11.85%. If we get to 20%, 25%, and then retrace, we still finish 10% positive on the year. That falls right in line with history. But I could see the S&P melting up, and this is crazy. I looked at this chart as well. I don't think yeah, maybe I did. So if you just take this high from 2018, connect it from the high post COVID recovery at 2021, is it ridiculously possible to see this market up to 6,000 this year? I mean, it seems like there's no way. Who knows? I mean, it's like, is anything stopping the market from going up another? Is it that big of a move if we hit 59 and change and we've went up another 10 to 12%? It's an index. We've seen the S&P up 20, 30% a year. You know, it could be one of those years. But if that is the case, I would be super bearish going into 2025, like ready for a reasonable, real correction. So I'm just saying, like, dips right now. I hope we get a dip because it would technically make some sense, and I'd stop going insane. But a dip that gets bought, I think we put ourselves on the trajectory to possibly, stretch to 6,000 on the SPX. Like, what's going to stop it right now? The market's ignoring the Fed, the market's ignoring inflation, the market's ignoring bad news, the market's ignoring geopolitical. It's like there's no drama right now. It's all out there, but the market doesn't seem to care. So just saying, I mean, unless we like crack down below this historical high and break all the structure, I think any correction that we do see is going to be by the dip. So I think it's going to be one of those like uncomfortably melt up type years where it's like, why fight it? You know? So that's why I look at positions like this where if I can try to be somewhat directionally neutral and carve out some profits, like I see that this is fine, but I want to change this a little bit. I want these couple things on this. I want this spike to be a little bit higher, and I want these dips to be a little bit tighter as well. I don't need it to be so high on the upside. Um, but anyway, I can reposition for that. I'll probably do it something later today. So I don't mind taking the trade, but going into next week's trading, it will be interesting. So maybe I position this around 52.40, but I'll take a look at that probably later on this afternoon. All right. I'm going to let you go for today. We're good on gold, good on silver. We did Bitcoin. I'm still looking to buy dips on Bitcoin between 60K and 50K if we get it. And yeah, I'll just take a look at everything. So we're at 16 bucks on Chewy. I need to see if I'm not going to get it called away at 20, maybe I can get something a little bit tighter, see my break even, just get it called away for a break even or better. Not looking to turn this for a huge profit, but if I make 500 to 1,000 bucks on it, I'm happy with that. I took a stab at it. The sell puts will be fine. Get some buying power back, but that's about it for a little income this week. Win wise, it was a good week. Made money on the SPX, made money on the SPY, made money on XSP, made money on the IWM, made money on the DIA, made money on the QQQ. That's good. And yeah, had a pretty solid week overall, and just continue to grind per usual. So before you go, if you'd hit the thumbs up button, like and subscribe, you want to join the Discord channel. This question comes up. I don't know what I have to do to fix the link, but I have a Discord. I have a free community chat. If you want to jump in there, I'll post it right here. The best place to get it is when you're watching this live. If I post the Discord group, if you're watching this recording and you try to click on the Discord group as the live chat's running and it doesn't work, that's fine. Just send me an email or leave me a comment, and I will reply to you with the Discord thread group chat. So here's the invite. Let me go with this link right here, copy, and Discord group. Okay, so that's a free Discord channel. You're welcome to join. Pop on in, say hi. Free group chat. I'll post the blog later on today. I've updated some stuff on Twitter. I've got some charts in the analysis section I think are interesting to keep an eye on. Private instruction. I had a couple people asking me about Hypertrend and Perfect Storm. It's all there in the private instruction tab. You want to check it out. Also, my trading rooms. I have a month trial for $27 in my trading rooms. You can trade with me in stocks and options and forex. And also got some good savings with certain softwares and programs that I run, and industry partnerships that I have out there. And then private instruction, I'll double check the schedule. I've got a few lined up for Saturday. I think I have a couple spots open on Sunday. If anybody's interested in some one-on-one, you can just explore that all on Discord and just let me know. Send me a direct message. Okay, sounds good. All right, happy Friday, everybody. And Equities on Demand students, I'm going to post in the chat right now for Telegram. We just have class at EOD class today at 11 a.m. Eastern time. Okay, I'll do EOD at 11. I'm going to jump on to the little collab with A1 Trading, Nick Syek and team, and we'll chat with them for a few minutes. And then our class at 11. All right, happy Friday. Have a good weekend. I'll see you Monday, 9 a.m. the usual. There will be some disruption coming in April. I'm going to be out for a conference and out for a conference. I'm going to a golf tournament in April. Some of you might know what it is. But anyway, it should be fine. I'm going to be trading still. I'm monitoring. I just might not be as active in running live sessions. So I do have some pay time off marked for 1 week at least, but not next week. Next week is business as usual. All right. See y'all soon. Happy Friday. Have a good weekend. Bye. See ya.